All right, everybody, I'm back. Welcome, welcome, welcome. Here it is, the bearded boy wonder Dave Bartosiak, and today, my friends, well, what the heck am I talking about? We were just talking to you guys. Back for round two. I think I got everything converted over. Let me go back. We got it here, we got it here, we got it here. We got good stuff happening. All right, folks. So thanks, everybody that made the transition over from the Starbucks feed now here to the Amazon feed. Again, sorry I didn't have the I didn't shoot the link to you guys. I should have. My bad, but that's okay. Here we are, back for round two. People are coming over, and I'm gonna give them a couple of seconds because I had to copy the old one. I'm gonna give people a couple minutes. Gonna give people a couple of minutes to come over. And today we are going to talk about Amazon. So last quarter we put together an iron condor on Amazon that worked. I don't know how many people remember that, but it worked. So that's good. Is the same thing going to work today? I don't know. Now, one of the unique parts about Amazon, parts that I love and parts that I hate, one of the unique parts is, yeah, that's how you talk. That's how you speak English, Dave. The EPS doesn't matter as much. This is definitely a company that's driven by the revenues. Because for a while there, Amazon didn't make any money. Let's see if this goes far back enough. Back in the day here, Amazon didn't make any money. It was all about the revenue. It's all we cared about. And Jeff Bezos told you that you shouldn't care about the EPS either because they were constantly reinvesting in their businesses and doing well reinvesting in their businesses. You got to bet the jockey, not the horse. And when it comes to jockeys, Jeff Bezos is right up there with the best. I don't care who you are. You got to respect the gangster that is Jeff Bezos, right? All right, we already got a bunch of people here. Let's get started. As always, price consensus and EPS surprise chart here on Zacks.com. Black line corresponds to the right y-axis, which is price. The little / huge, in this case, green arrows are earnings beats. The red arrows are earnings misses. Now, why are these green arrows so big? Because these were big beats. Why are these red arrows so big? They were big misses, okay? Multicolored lines represent the evolution of our Zacks consensus estimates over time. And here you can clearly see why EPS doesn't really matter for Amazon while all of these are going down, the stock's going up. They just don't care. Started to care a little bit, and then EPS took a dive, stock went up, nobody cares, right? So that's one of the negatives here with using the Zacks analysis, at least this particular part of Zacks analysis on a stock like Amazon, is maybe the market doesn't care so much about the EPS side and it's all about the revenue. And our whole thing is EPS. So admittedly, a little on the negative side there, right? Yeah, what you gonna do? Let's look at the detailed estimates page for Amazon. See what the people have to say. Zacks ranked number 3, hold right now. Value style score of F, well, duh. Growth of A and momentum right now of A. So a lot of momentum behind Amazon as it's quickly approaching the $1,000 mark. They're reporting again after the bell today. So we're going to have Starbucks and Amazon after the bell. The good news is, in my morning after session tomorrow morning, we are going to talk about Amazon and Starbucks live reaction. Now that one you won't get unless you're hooked up on Zacks Live Trader. Shoot me those emails, livetrader@zacks.com, so you can get connected with Live Trader. Revenue. 21.5% revenue growth the current quarter, 21.45 next quarter. Current year numbers look like 21.6, next year 20.91, which again is amazing when you're talking about a company that's making $35 billion a quarter. I mean, it's just mind-boggling. And the EPS is all over the place. So year over year, we're actually looking at a contraction in EPS. Next quarter, it's supposed to be 7%. Current year, 45. Next year, 70. They don't know. They have no idea. And that's why Amazon is always like a 3. Just look at this. Like, you got 2 people going down for the quarter, 1 person going up, 1 person going up, 3 people going down, 4 people going the other way. It's a free-for-all. Just a smorgasbord. Nobody knows anything about this. Look at these numbers. That makes no sense. It's like I'm doing linear algebra. Just random. No. They don't know. And look at the magnitude of the move, too, on our Zacks consensus estimate. Overall, this is negative, though. All of these moves are negative on the EPS side, right? And it's funny, it's negative, but this is the direction, but the arrow's going down. I don't know. Maybe I shouldn't use blue. Maybe I should switch up styles. We're going pink. We're going pink now. Swirlies, pink, downside. Who knows? All right, I'm losing it, guys. All right, now if you take a look at the surprise, last quarter, 10% surprise. Quarter before that, 38% miss. So I'm going to say Amazon's going to surprise one way or the other, either to the upside or the downside. And the real impact is going to be what happens on the revenue side, okay? Let's look at the impact and what the impact's been by taking a look at my G14 classified stuff I got going on right here. And this is what's fresh in people's minds, I think. 2014, 16%. 2015, 14%. 2015, 8%, right? That's what's fresh in everybody's mind when you're talking about the move on Amazon. Because recently, you've got a 3% move, a -5, a -2. As a consensus has been all over the place on the EPS side. But what about the revenue side? So we've got basically a huge revenue miss. Last quarter, Amazon didn't do too much. A little bit of a boost in revenues. Meh. Another boost in revenues. Meh. Decent move in revenue. It had $1 billion more, right? So we need $1 billion more in revenue for this to move 8%. Is that what we're talking about, right? I don't know. I don't know, Amazon. And again, just to illustrate, well, let's look at another page I have. Can I go revenue further out? Kind of revenue growth here. Look at this growthiness. How far back can I go? Can I go 5 years? I can go 5 years. Look at that. Can I go 10 years? See if I go 10 years. Nope, I did 5 again. 10. Man, look at this. Here's your Amazon. Back to 2008. Just look at these numbers. Look at that. 29, 27, 39, 40, 27, 21, 19, 20, 27, 21, 20. Man, serious, huge numbers, huge growth numbers here for Amazon. That's just absolutely fantastic, just mind-boggling, right? Huge numbers. But we already knew that. Let me look at the Zacks rankiness. I just want to know. So, during this big push higher, you had a very favorable Zacks rank, right? When it was muddling through, we didn't like you so much, Zacks rank. Now you've got divergence between the Zacks rank and the stock price. Divergence, my friends. Divergence. All right. Let's keep this in mind. The word I was looking for, guys, is divergence. That's the phrase that pays today. We were talking about doing that back in the studio, where you ever watch like Pee-wee's Playhouse, when there was like the secret word and everybody would freak out. I was going to start doing that, like have a phrase that pays and everybody start freaking out when I say it. Here's what I want to show you. Money flow down, stock up, divergence. Now, granted, it had been above the zero line here, so it's still buying pressure overall. But still, definite divergence between the money flow and what we've been seeing here in the stock price recently. Also, we've got a very thick band of volume here, which is right at the current price. So you got a ton of volume that's been going out. Exactly. Money flows down, divergence between the money flow and the stock. A pattern I do love to play, I do this in Momentum Trader all the time. The commodity channel index comes down to the zero line and then I buy it. Normally they say you wait, like negative and then it crosses the zero line. That's one way. But a continuation pattern that I use all the time for a stock that's up near highs is this move just from the commodity channel index going from overbought to the zero line and then I buy it again, right? So that would have put you in down there. Boom. And now we're approaching this. So this is the other thing, though. It's not all bearish or anything because now it's approaching this resistance level. Is it going to break out from this resistance, right? The market's telling you it wants to break out. NASDAQ wants to go. The NASDAQ always goes. Nice, fierce move here. And, of course, the FANG stocks. Remember, Facebook, Amazon, Netflix, the Googs. Look familiar? They're pretty much all doing the same thing. We know what happened with Netflix. Did great. Facebook, we might be covering these guys next week, so I don't want to blow my cover on Facebook, but I will give you a little preview. What's this? Divergence. What's going on? What's with the divergence? We're going to take a look and see later. Okay, so that's my story with Amazon right now is why the divergence in the money flow? I don't know. All right, let's do some pricing. So, again, these guys are after the bell today. 920. Spectacular. Just spectacular. 920 call, 920 put. It's going to be, the juice is loose on these ones, man. There's a lot of juice in the game here. 920 on Amazon. 1850 by 1860. We're going to call that 1855 for the 920 call. Add that to the 1785 by 18. We'll call that 1795 for the 920 put. 3650 on a stock that's trading 920. So they're only looking for 4% on Amazon. We're only looking for a 4% move here following the report. The expectations have kind of come down a little bit for this. Interesting. Only looking for 4% or what did we say? 36 bucks? 36 bucks on Amazon. Okay. $36 holler still takes us $9.55 and $8.85, which isn't even on this. Oh man, this is gonna be a pain to show you guys this. All right. Oh, we got to change from near the money to showing all. Woof. Oh. Let this load up. This is going to take a while because look at this. Can you imagine having... Who's the guy that's got the 600 strike? There's one of them out there, right? He was like, nope, I'm going to load up on these 600s. I'm going to go out to April, actually these are weekly, so this happened recently. I'm just gonna we're gonna play in the May expiration here right now. We'll get back to April in a little bit, I suppose. But for now, let's look at May. May 19th expiration. So 920s. All right, where are the bulls at? Bulls. Wow, man. The 920s out in May cost 25, essentially. And basically 955 is where the market is saying, well, the options market's saying it's going to go. Do our little halvesy trick. So essentially 940 is what we can look at. So there's that. Aggressively on a call spread. I don't know about this. Got 940s, got 950s. 40. What if we did this? What if we go out ignoring these 920s all the way out to the 955, and now we're going to put together a credit spread on the bearish side. So the bears essentially say there's no way this thing gets above 955, right? Granted, there's a decent chunk of open interest at 950. And then there's another one out here at 975. Anyway, if we look to sell that, saying there's no way they're going to go up that high. And what, 965 maybe? See, the problem with what's happening on this Amazon chart right now for us, if you're looking to get bearish on Amazon, is you don't have any point of reference up here. I mean, anything can happen up here. It could do whatever it wants to do, right? Who knows what's going to happen here with Amazon, how far it'll break out. You got the $1,000, that's sort of the logical resistance level, I suppose. But I don't want to go out. I mean, can you imagine a $1,000 call is going to get you 3? I don't want to be in the position where we're getting, 40 cents and having, or getting here, in this case, you can get 93 cents, 90% at risk. Granted, that is all the way above 1,000. That just feels boring to me, right? Is that even possible? Let's go back to the front week really quickly and see if there's juice all the way out towards 1,000. I mean, this is crazy if you think about it. Who would have thought that we'd be looking at? Yeah, look, they got these are 70 cents all the way out there. Wow. But the funny part is that's only, 7.5% higher than the stock is trading at right now. Amazon's done that many times. And even when we thought Amazon wouldn't be able to do it, it still does it again, right? Okay, I was just wondering, so I had to go out and take a look at that front week, that expiration all the way out there, okay? All right, back to the task at hand and the bearish side of the equation. Come on. Bearish side of the equation. Bar chart loves to do that. The old bar chart reload. Okay. Again, can't do the near the money. Have to show all. I need everything. So if I'm a bear going out, if I'm a bear, I guess that's a bear safe trade. I don't want to do a bear safe. I want to do a bear that's got a little bit of chutzpah. Do I? Get a little bit more risk versus reward? Yeah. Let's do this. 955s, 965. Bears are going to price this out. So if you short the 955 call, you're going to get 1085. If you simultaneously buy the 965 call, you're going to get 830. You're going to pay 830, so that's 255. Okay? Difference in the strike prices is $10. So $745 at risk. So $255 on $745. You could still make 34% on this, assuming Amazon doesn't go above 955, right? So if Amazon reverses a little bit and comes down, you can make pretty decent coin on that trade. I want to price out this much closer one just to see if there's a huge difference in it. So selling the 955, and this is a cheaper way because I know a lot of you guys putting $700 at risk on a one lot here isn't something that a lot of you probably want to do. So I want to make this more relevant for everybody. So going long the 955 call, I'm sorry, going short the 955 call while simultaneously selling the 957.50. So it's going to cost you 1085, or you're going to get in 1085 from the 955. It's going to cost you 1020 for the 957.50. So 65 cents in this case is your net credit. The amount of money you're going to have at risk is 250 minus 65 cents, or 185. So you can make 65 on 185. That's 35%. I'm going to double check this and make sure my price is right. Did I do this right? I did. 250 is the difference in the strike prices minus the 65 cents is 185. Yeah, you make 65 on 185. So this is the way to play this. You don't have to go out $10 and put on all that risk. That's just extra risk that's out there. So in this case, you can go out to 955s, short the 955, 957.50, and still have the chance to make 35% on this one, okay? So I'm going to say that the bearish, a bearish trade here is short the May 19th, 955, 957.50 call spread for 65-cent net credit, okay? We don't have to add all this risk by going out $10, and you don't have to do that. So we can make it right here. Now, I know we got some feedback last time. We were talking about how little the open interest is and that sort of thing. On a stock, on an options chain like this on Amazon, when you see this spread is so close to each other, like there's market makers out here who are willing to make moves on all of this. You know, they're there. And they'll fill you in there. I got some feedback from some guys who got filled within there on the, which was it? The Chipotle trade. So they'll fill you. They'll get you out there. Okay, that's the bearish side. Now the bullish side, I'm going to do something very similar. And we're just going to do 885s. That's where we're at with that. So, well, I made my little... So again, I'm not going to go 885 and then go all the way up to, 875, because I don't think we need to do that. Just do it right here. Just in that next strike over. 885, 1068 is what you could sell the 885 put for. Simultaneously buy the 882.50 for 1003. Oh, funny how that works. 65 cents. I'll let you guys guess the rest of this. So bullish trade is short the May 19th, 885, 882.50 put spread for a 65-cent net credit. Look, they look the same, don't they? Very, very interesting. Okay, now I know what you want. I got to give the people what they want. We want something that can make or break us tomorrow, because that's how we are. I am going to be bearish on Amazon, okay? And I want to clarify my bearishness is not that I hate Amazon, that I don't like Amazon, that I think, the stock's going to totally go to zero or anything like that. I just think that there is divergence in the money flow and what's been happening in the stock price. And the market overall, huge rally the last few days, is really going to be expecting some really solid out of these guys. Overbought on the CCI also. approaching the 52-week highs. Yes, it could totally break out. We've seen that before. I think it would be healthy for this to kind of come on back closer to this 50-day again. 50 days down at 870. So I think they could move a little bit more than what this market's looking for. So, and again, with these lotto tickets that we're talking about, you don't have to just buy, we don't have to go outright long. 870 is kind of, I think, where the worst that it gets, right? You can actually do out of the money put spreads and have the same effect of a lotto ticket because there's really no time value here. So we can do an 880 870 put spread for a lotto ticket. So if you go long the 880 put, it's going to cost you $348. Simultaneously shorting the 870 put, you're going to get back $2. So that's $328 that you're going to have out there, right? Your upside potential is $1,000. So you can make $662 on the 328. So you could triple up. So the lotto is the 880. Maybe the lotto is just the 880. Well, whatever. The lotto is the 880, 870. Is 880, 870. April. So lotto long April 28th, 880, 870. Call spread 1. What did I say it was? Did I totally screw up all my math? Where's my calculator? 348 minus 2. 348 minus 148 is the net debit on this put spread, okay? The amount of money you could make is $1,000 minus the 148, so $852 on the 148. So this is where you're capped at. I know I did the math all wrong, guys. I'm sorry. I apologize. So this is something that looks much more attractive in terms of lotto land because your net outlay is only going to be 148, but your upside potential is $1,000. So that's the lotto ticket, okay? For 148 net debit, okay? Not 340, whatever, not 346 like my bad math said. All right, so there you go. So that's a very aggressive trade, very likely to blow up. Overall, my stance is bearish on Amazon and bearish in terms of selling that 955, 957.50 because that's what's up. And if Amazon does break down, I think it can break down to the 870s. Absolutely. But I don't think it gets really gnarly. But I am bearish leaning into Amazon here on earnings. Okay, guys. Now remember, mañana, that's tomorrow. We're going to do the morning after at 9 a.m. So if you're not already hooked up with Zacks, shoot me an email, livetrader@zacks.com. We can get you connected. You'll get access to that Live Trader morning after session at 9 a.m. We also do Q&A, so that's, I like it. People like it. We do it for about an hour, so it's a long time. And then later on in the day, we're going to do Apple. So a lot to do tomorrow. Action-packed agenda as always. So I want to thank everybody for hanging out with me here today on Zach's Live Trader. I hope you guys have a fantastic day. Don't forget, shoot me over your request for what you want me to talk about next week. livetrader@zacks.com, and I'll try and do the most popular one there. So thank you so much for hanging out with me here today, and I will see you all mañana.